Finally got a pause on interest rates from the Fed. Is it good news or is it bad news? What's happening and what's the effect on you and your money? Well, first of all, we've had 15 months of continuous rises from the Fed. So we actually look at it, it's been a massive increase that perhaps has never seen before in the economy. In other words, we had excess money. Money was digitally added to the economy during the COVID times. And then we caused inflation. Why? Lots of different factors in there. There was, of course, supply chain issues. There was issues with not enough people, so therefore wage inflation. But a surplus of money, the economy in America in particular has been on fire. Causes inflation. The problem with inflation is unless you sort it, it actually gets worse. In other words, inflation causes more inflation. You get social unrest. Why? People are dissatisfied because the cost of goods are going up, and are their wages going up at the same time? So governments have a responsibility. The central banks have a responsibility to make sure they get rid of inflation. The difficulty, however, is in order to get rid of inflation, you have a blunt instrument of interest rates. You have to rise them, and when you rise them, you're in effect slowing down the economy. You're likely to call unemployment. American economy is going so fast that slowing it down hasn't caused an issue currently. The Fed has now paused. Is it enough? They actually dampened investor enthusiasm by, although pausing interest rates, said quite clearly they expect interest rates to go up further. The bond market in particular wasn't expecting that. They actually believe that interest rates will come down. The Fed said no, they expect a couple of more interest rates rises in there. They're dampening enthusiasm. They don't want to encourage this economy that's growing too fast. They want to slow it down. So you could argue, are they saying it or is it reality that they're going to raise interest rates again? Right now, what would you like to see, or what could you see? Well, first of all, you could see the dollar depreciate over a period of time. Why? We've seen this push away from people be using the dollar. One, because they've added so much dollars to the economy. They in effect have diluted the value of the dollar. But also at the same time, we've seen countries separate. China, obviously, Russia has fallen out in big style. And indeed, even Saudi Arabia is pricing oil in other currencies. In other words, people don't want to rely on the dollar anymore. There's this push away to say, well, we don't want to rely on it. We would rather have less reserves in the dollar. So if interest rates have peaked, and it looks like to me they have, they're saying they're going to rise them again, I actually think that we're going to see the data coming through and they don't need further increases. So for me, it's an opinion. I actually think that this is probably the peak for the dollar, and you could actually see that it's the peak for interest rates and a fall off in the dollar at some stage during the rest of 2023. What else is going to happen? You'd expect some volatility in stock. Why? Just simply and solely because they're going to be keeping interest rates higher for longer than was anticipated by the market. However, people are looking past a recession, looking to a stage when they will reduce it. There's good signs in the economy. There's good signs that inflation's coming down. There's good signs that the global economy actually has got potential to pick up. Many are saying that with AI and the technology that's being produced at the moment, there's actually opportunities for the world to be more effective. It's actually interesting times. So make sure you subscribe to my YouTube channel so I can keep you up to date. If you're an investor, diversify currency. For me, I wouldn't be investing too heavily in the dollar. That doesn't mean I'd completely move away from it. I definitely diversify. If I'm investing, then I'm certainly going to be investing in companies that have got margin, companies that have the potential to grow in this particular marketplace. So I'm still positive on the market overall. Expect not the massive incline or massive rises between now and the end of the year. You can get good fixed interest rates as well. Diversify a portfolio, have some exposure to quality stock companies that have margin, some into fixed interest, because you've got fixed interest rates are actually going to stay at a reasonable level. Always talk to a financial advisor. Right now, interesting times. At least we got a pause from the Fed. And I actually think, personal opinion, opinion that it's a pause and it's likely to be the peak for interest rates. That's good news, not just for America, but for the global economy. Other economies, like the UK, they've got higher rates of inflation, likely they're going to have to raise interest rates higher than the Fed has. In other words, the pound could appreciate against the dollar. Have a great day. Thanks for watching. Make sure you subscribe and like the video.